Hello, everyone. Let me see if my camera will turn on. Hello, everyone. This is Kathy. If you can see me and hear my voice, let me share my screen. Give me 1 second. Oh, sorry, it's not what I wanted to do. Okay. If you can hear my voice and see the calendar, let me know. Let me know that everything is coming through. The YouTube live stream, let me know that everything is working properly. Say hello. Good morning, everyone. Where are you all tuning in from? Good morning from Santiago. Hello, David. Hello, Tall Order. Hello, Miguel and Franz and Ali. Hello, Traders Hub from the Philippines. I love these morning live trading sessions because everyone is coming from all corners of the world, including, you know, right in my backyard, Baltimore and Europe. It's a great time to trade, and there is no bigger, well, that's an understatement. There are, of course, bigger event risk than the inflation report, but this time around, it is indeed one of the biggest event risks on the calendar. And, you know, I love the opportunity to be sitting here trading with all of you. Do you want to say hi, Boris?
Hi, guys. Hi, everybody. Good to see you. Nice to see everybody's coming in. It may not be the biggest event risk ever, but it's definitely the biggest event risk on the calendar this month, which is why we're trading it. And there's so much pre-positioning going on right now, so many different scenarios. Kay is going to go through them with you. It's very exciting. I'm very, very excited to set us up. Really looking forward to trading this. Should be a lot of fun.
So, you know, Boris is right. Sometimes non-farm payrolls is the number to trade, the number to watch. And oftentimes it still is one of the most market moving numbers. But when you are in an environment where central banks around the world are obsessed about inflation, the inflation report, you know, naturally becomes the much more market moving release. And what's really exciting about trading today is that not only do we have the inflation report, but we also have the US retail sales report and the Empire State Manufacturing Survey coming at the same time. Now, of course, this makes trading a little trickier because there is so much going on. But, you know, I think that it also gives us, you know, more color and more opportunity because retail sales is an input into the GDP report. And at the end of the day, all of this boils down to what it all means for growth. So that is why everyone looks at, you know, retail sales, inflation reports so closely. Now, the Empire State Survey is important too, but of course, it's going to take on lessened importance today because.
Sorry, go ahead. Keep going.
It's going to take on lessened importance today because of, you know, the inflation report. But normally, the reason why the Empire State Survey is so significant is because it is, if you look at this, it's for the month of May. So it is one of the first indicators that we get for the new trading month, whereas inflation data is for April, retail sales data is for April, and even the non-farm payrolls report is for April as well. So today, we're going to be live trading the US inflation report and the retail sales report with you. Now, when it comes to trading large, major, significant event risk, I always say that it is best to trade, especially when you really don't know what's going on, to trade these big event risks reactively, meaning that, you know, we're not necessarily going to lay on any trades in anticipation of the inflation and retail sales report. We're going to wait for the number to come out. We're going to see what the outcome is, and then we are going to react to it. But when we trade,
although I will interrupt you, if you want to punt, today is the one exception to this rule where if you want to take a punt, our friends at Apex Trading are giving this 90% discount sale, which means you could literally buy 10 prop accounts for the price of one. And if you want to just simply, you know, put everything on black or put everything on red and see if the data goes, it's just a fun, interesting way to see if maybe you could pass your prop in one single trade. But as good as this is not proper trading techniques, but it's a lot of fun. So I'm just laying it out there for you if you guys are interested. Kay is gonna probably put the link in there for you guys. Yeah, she's putting the link in there. It's literally, I'm not exaggerating, $17 for anything from $50,000 to $250,000 account. So it's incredibly great deal. I'm just, I'm putting it out there as a fun exercise for those people that want to take a punt. But of course, proper trading, which is what we're really going to focus on, is going to be post to that. So I'll let you continue. I'm just going to hop off the camera for 1 second, guys, because I got to get coffee before we start, and then I'll be back to you.
So even though we won't be trading ahead of the release, we're going to wait for the 8:30 number. There's planning that goes in, and that's what we're going to talk about. But there is one trade that I do have on. Over yesterday, if you look at this, this is my Discord channel. Yesterday, we had gotten short dollar CAD at 136.70 at the New York Open. And this is one of my swing trades, short dollar CAD, 136.70, stop at 137.10. And we actually already closed half of our position, and our stop is at break even, 136.70. So I'm actually going to let this one float simply because we're at break even. We've already locked in some profits, and we're now operating on a trailing 30 pip stop. And part of the reason, if I didn't have already profits locked in, I wouldn't necessarily had, had put on a new trade. But this is kind of consistent with my view, because you can see here are the reasons why I like selling dollar CAD. US data, CPI and retail sales are expected to be weaker. US yields are lower. Now, this was yesterday. Today, we still have US CPI and retail sales expected to be weaker. We still have US yields lower, and we still have, we're coming off the backdrop of a stronger Canadian jobs report and IVPMI. So I do have one positional trade on in anticipation of the US inflation and US retail sales report. But this is a trade with an entry at 136.70, a stop at break even now because our first target is hit. One of the other reasons, now, I did lay on this trade what we call proactively, which means putting on the trade in anticipation of the data. I actually may have done that today if not for what happened yesterday. Now, if you understand anything about fundamentals or economic data, or if you're trying to learn about it for the first time, you may know, and it's not a stretch of the imagination, that there are certain pieces of economic reports that are what I call leading indicators of other economic reports. And the leading indicator, no surprise, of the US consumer price report is the US producer price report. Now, not a perfect leading indicator. So it's not to say that this is a given that because PPI yesterday surprised to the upside, PPI rose 0.5%, a surprise upside, that CPI today is going to surprise the upside. But it certainly is a bit of a red flag to me, right? Because if PPI surprised to the downside yesterday, I would have said, okay, maybe we would take a proactive trade, meaning that maybe we would lay on a trade in anticipation of the inflation report. But because PPI is surprised to the upside, meaning that it's stronger, I don't necessarily want to do it. Another reason why I am avoiding a proactive trade, aside from what we have on already with dollar CAD at a break-even stop, is because of Powell. If you do a quick Google search, you'll see that Powell, okay, this is not what I want, but there was an article that we can skim quickly from CNBC right here that says Powell, who spoke yesterday, was not that dovish. And he specifically said that inflation has been higher than thought, and he expects rates to hold steady. And he reiterated on Tuesday that inflation is falling more slowly than anticipated, likely keeping interest rates elevated for an extended period of time. We did not expect this to be a smooth road, but these inflation readings are higher than I think anyone expected. Okay, so what are these inflation readings? The Fed watches two things. The Fed watches CPI and PCE. PCE is the price consumption expenditure, and CPI is obviously the core, the consumer inflation rate. So is he suggesting to us and dropping a hint that maybe these inflation readings are higher than I think anyone anticipated? Now, theoretically, Powell is not supposed to have these numbers in advance of his speech. He's supposed to get them from, at the same time that we get them. I don't really know if that actually happens. I would be really surprised if it was FOMC day that they didn't give him a peek at what these numbers are. And I'd be really surprised if the Federal Reserve's own measures don't tell them what they are. But the Fed chair is telling us these inflation readings are higher than anybody expect. PPI was stronger. Powell is saying things that suggest that this number could be stronger. So for that reason, for those two reasons, we have no real justification for jumping into this trade proactively. Because first off, we looked at the beginning of the week, gas prices. And we looked at how gas prices are what I like to call also a leading indicator for consumer prices. And I like to go on gasbuddy.com, completely free website. Scroll to the bottom. We're looking at the fuel price chart. Super simple, just something I do every single month ahead of the CPI report. The only thing you need to look here, there's a whole bunch of lines, is the green line, which is current, because the black line is 2 years ago, the blue line's 1 year ago. We don't care about that as much. So we look at the green line. Between April and May, the green line basically flatlined. So that means that, gas prices didn't really change all that much. So we know that gas prices didn't really change that much. We also know that oil prices, which is also affects inflation. Let me get rid of all these indicators. In the month of April, you will see, where's my arrow, that oil prices dropped a lot, pretty much from a high of $87.50 down to $79 a barrel. So oil prices were on a one-way downtrend.
Can I just chime in here, because it's a really interesting point. So I'm in JERS right now, which is the ultimate state for oil, and it is my little personal inflation gauge. I will say this, it's an interesting point. Kay is absolutely right that in the month of April, oil prices declined. You can go back to that chart if you want to, just the oil price. However, if you look, I'll pull it up, if you look at a decline, there was a very, very steady climb all the way from basically the beginning of the year all the way to 80. And gas trades on a lag, on at least a month lag. So if I'm just from my personal anecdotal experience, gas was $3.45 a month ago. It's quoting $3.65, $3.75. It's not horrendous. It's obviously not going to impinge consumer spending much, but it's 20 cents a gallon more than it was a month ago. That's clearly, I think, partially inflationary, and that may translate in CPI. In other words, there could be a lag in CPI that could actually have an upside surprise. Just a thought as far as gas goes.
The bottom line here is that it can go either way. It can go to the upside, it could go to the downside. There's arguments for both cases. And one of the other things I talked about at the beginning of the week of Monday, Caffeinated Buzz, that all of you should be attending because it's completely free, streamed on live to YouTube, is that the dollar strengthened in the month of April. The dollar index, let's get this up here, rallied in the month of April. So this is April in the dollar index. And when we have a strong currency, that tends to drive down inflationary pressures, which is why, central banks, usually if their currency is too weak, they get, really alarmed, like especially if inflation is high. the Japanese, obviously the currency is very weak, 30-year lows, but they are less alarmed because they've been fighting deflation, not inflation. They haven't seen inflation really manifest itself in a meaningful way yet. But the rally in the US dollar in the month of April drives down inflationary pressure. So let's go through the list. Stronger US dollar is bearish for inflation. Higher oil prices in April is negative for inflation. Gas prices are flatlining, which is negative for inflation. But we have producer prices coming in stronger. We have Powell yesterday saying, inflation measures are not falling as much as everyone anticipated. So it's a wash. And that's why it's best traded reactively. Retail sales, on the other hand, is expected to be really weak. We had earnings misses from Starbucks, who reported the first drop in same-store sales in a very long time. And we also had earnings misses for McDonald's, and both of them are basically citing weaker consumer demand. So the retail sales report could surprise to the downside. So there are a lot of moving parts to this that give us a reason not to trade until after the report. Aside from the fact that for those of you that are joining us late, I talked about how we have a swing trade in dollar CAD with the target first half of the position closed already. We shorted dollar CAD yesterday morning at 136.70. Our stop is at break even already. We're already locked in profits on half of the position, and we might as well let it ride because I think it still could surprise to the downside. But let's talk about our trading plan. And in order to talk about our trading plan for today, we have to talk about what is priced in. What does the market think is going to happen? Well, you can see from the price action of the dollar index that the market has been selling dollars in anticipation of it. From the price action of euro, that the market's been selling dollars in anticipation of it. From the price action of gold, which is at the highest level in the week, almost the highest level in a couple of weeks, market has been selling dollars. Dollar yen is finally beginning to show a little bit of weakness, and dollar Swiss is also showing a little bit of weakness. So across the board, we see, even in US yields, that the market is preparing for a negative number. But with that said, we also look at what all of this means for the Federal Reserve, because at the end of the day, the question here is, okay, if we have a US inflation miss, how will this affect the Federal Reserve's interest rate decisions? Because yesterday, what was really interesting about yesterday is that we had a really hot inflation number, a really hot US PPI report. Powell came out and said, inflation has been higher than thought, inflation readings are higher than expected, and we saw a lot of volatility in the markets, and we saw, just a lot of movements. So right now, obviously market does not expect any interest rate cut next month. 91% chance of no change in the Federal Reserve rate. In July, they're also pricing in a 66% chance of no change. So really, the market is not fully pricing in an interest rate cut until September. And in September, it's pricing in about I wouldn't even say fully. In September, it's pricing in about a 70% chance of a interest rate cut. And it is in November that we get to 80% chance. So in reality, right now, there's only, I would say, there's one full interest rate cut priced in. And then here, let's see, this is basically about a 60-ish% chance of 2 interest rate cuts this year. So how could today's CPI, retail sales, and Empire State Survey affect Fed rate decisions? So let's imagine that the data surprises to the downside. So the data surprises to the downside, core inflation rate, and when I say surprise the downside, we kind of need every single one of these to surprise the downside. I don't care so much about Empire State, but we need the headline number in inflation to be lower than 0.4%. We need the core inflation rate to be lower than, to be 0.3% or lower. and we need retail sales to be 0.4% or lower. Although if it's pretty much 0.4% or lower or 0.3% lower, that's pretty much in line. That may not be very dollar negative. We need it to miss to the downside. 0.2 in the core inflation rate, 0.3 in retail sales, 0.3 in the overall inflation rate. At that point, if we get that, we should see a sell-off in the dollar. But the sell-off may not be that deep, and the sell-off may not be that durable. And the reason for that is because if you think about it, think about how people will think afterwards. The next Federal Reserve meeting is not until June. I believe the next Federal Reserve meeting isn't until June 15th. And between now and then, we will have the PCE deflator, we'll have another inflation report, and we'll have the employment non-farm payrolls report. So we'll have three really important measures before the June FOMC meeting. And, the market certainly doesn't expect the Federal Reserve to move in June. So there's actually a lot of data sets that are going to come out before the July meeting and the September meeting, where the market really thinks the Federal Reserve is going to lower interest rates. So what I'm trying to say is that even if we get a inflation miss, a retail sales miss, unless it's really, really weak, unless these misses are really, really weak, we may not see a durable US dollar sell-off because there's so many more economic reports that will be coming out between now and when the market really legitimately thinks that the Federal Reserve is going to lower interest rates. And if it's actually in line with expectations, and these economists are right with their forecasts, then actually the dollar could end up rallying. And certainly if the data surprises to the upside, like PPI predicts, or like the like Powell suggests, then the dollar, which has been sold recently, will have a much more significant rally, because that will not only push out, confirm what the market's thinking and push out interest rate cuts, but it will also reinforce the PPI report that we had yesterday and the less dovish comments that we had from Fed Chairman Powell yesterday. So all of that suggests that maybe there could be more opportunity to the upside in the dollar than to the downside, depending upon how the data surprises. So what are we looking at in terms of trades? Well, there's a couple of opportunities that I'm looking at. First and foremost, if we do get a dollar bearish number, the trade that I like the most is dollar Swiss. And the reason why I like dollar Swiss the most, and let's pull up dollar Swiss over here, and I'm going to put back on my indicators here. I like dollar Swiss the most because, first of all, it's not dollar yen. Dollar yen is like an animal and sometimes just sings its own tune and could have hyper volatility. And because tonight we get the Japanese GDP number, which is expected to be weaker, potentially weaker yen number, a potentially weaker dollar number. It makes dollar yen a little trickier to trade. Although I do think dollar yen will still move to the downside if we get a weaker number. But I like selling dollar Swiss if we get a weaker US number. I also like possibly buying euro. Euro has just peaked itself above the 100 SMA. This price action shows that it's not sure if it wants to stay there, but we had stronger Eurozone GDP numbers overnight. We had stronger Eurozone industrial production numbers overnight. So I like that as well. And we're already short dollar CAD. I don't love the fact that dollar CAD, the low, stopped right at the 50-day SMA. And this proves to you that SMA matters, that support and resistance matters. But I think that between the strong Canadian data, along with the weaker US number, that if we get a dollar bearish number, dollar CAD to move to the downside, and we're already in this trade for our swing trade to the short side. So dollar Swiss is my favorite short if we get a negative US number, and along with euro. If we get a stronger US number, though, I like selling euros. I like selling euros because this resistance is flimsy. And also, the ECB is expected to be the next major central bank to potentially lower interest rates, especially after Sweden's central bank lowered interest rates. And the language that we've been hearing from the ECB suggests that they very much are thinking about lowering interest rates. And it's just like the Federal Reserve. We heard from Powell yesterday. He seems really, worried about upside risk to inflation, it being stickier, and his comments are definitely not dovish. The ECB has been suggesting that, they could lower interest rates. And I don't think we can ignore that. For those of you that have the kahunas, pound should also move lower because the BOE has been very vocal in the last 24 hours saying that the market is not pricing in enough interest rate cuts. And so that is also an opportunity. But, I prefer euro to the downside if we get a dollar positive number, maybe even dollar yen to the upside. If we get a dollar positive number, although I think, euro dollar could really be the trade. So that's basically what I am looking at and the currency pairs that I'm looking at on the back of the inflation report. And for those of you that are joining us late, I want to remind you that we do have one positional trade on. Normally, I would not put a positional trade on because of how, there's reasons to believe the number could be stronger. There's reasons to believe that the number could be weaker. But we put this on yesterday at the New York Open. And we already have our first target reached. Pips have already been banked, and we're at a break-even stop right now. So we'll see how it goes in dollar CAD. All right, Boris, with 2 minutes ago, do you want to share with them your trading plan and the instruments that you're looking at?
Well, we're looking at gold, NASDAQ, and the S&P. Those are going to be the three primary instruments that we're going to be trading. We're going to obviously also wait and see how the numbers print. There'll be a lot of price action in the first 2-3 minutes. We're going to possibly trade continuation or possibly mean reversion, depending on where the price action is. And I'm going to read the price action, explain to you what I'm doing, and trade it. And then we're going to trade all the way to the New York Open and through the New York Open. So hang out with me. It's going to be it should be a really, really fun session. The most negative scenario I can imagine is a miss on retail sales. Retail sales comes in soft and inflation comes in hot. That's kind of like the worst case scenario for stocks. If that comes through, it's very likely we see a sell-off. So we are, what, 30 seconds, 40 seconds away from takeoff? Yeah, about 55 seconds away from release. So we'll just, we'll watch it. Kay, maybe you want to just see it
in the price action first before we, get all of the quotes come in, because the bankers always get the numbers, a millisecond beforehand. Sure. But do you have your squawk up for us?
I have my financial juice on the other computer screen so I can see it. So just to let you know what everybody's looking for, people are looking for 0.2 on core retail sales, 0.3 on core CPI, 3.6 on year-on-year CPI. So I will let you know what the numbers are. You probably see it before me just on the price action alone, but don't instantaneously react to price action because sometimes it can be totally false. So we got 3-4 seconds left. I'll let you know as it comes in here. Okay, New York Fed comes in at 2.
Okay, looks like the numbers weaker. So, our dollar CAD trade worked out really well. We're at trailing stop. I would go, like I said, it's a weaker number. I think dollar Swiss 90.23 looks like a good short in dollar Swiss, and euro's looking good as well, but euro to the long side. Hold on, I'm gonna put this to our BK members. And so, okay, here we go. Breaking numbers come out. The headline number is the core retail sales came in 0.2%, which is weaker than forecasts. And we have core CPI coming in weaker. The year-over-year rate at 3.6%. Retail sales 0 versus 0.4. So pretty ugly number there too. I think euro 108.63 looks like an interesting buy as well. So dollar CAD, right now the low is 135.96. We have a 30 pip trailing stop on this, so we're at 135.23. I'm gonna, for our swing trade, take our profits here at 96. Hold on one second.
So, while Kay is talking, I just took a long in NASDAQ, and I'm just going to try to see if I can close it for like 300. I'm trying to flatten it out here. It's not letting me close, but we'll see. I guess I closed it out for, hard to say. What I close it out for? Oh, actually, I think I did close it out for a decent amount. Hard to say. I went long NASDAQ because that was the most natural trade. But relax, we're going to have plenty of trades to do here. Right now, clear net positive bias, but we're going to give it a little breathing room here to see how it plays out. Let me
yeah, it's not huge moves. So dollar CAD, we had gone short at 136.70. At the time when we were talking was at 134.30. So we closed out the rest of it at 135.96. So basically it's it's tremendous profits, like 74 pips on the first half of the position, plus about 30 is over 100 pips on this dollar CAD swing trade. Now, of course, this dollar CAD swing trade is more of a proactive trade. And it seems like right now the market is a little quiet. Let's deconstruct these numbers real quick. So CPI number, the headline number came in 0.3 versus 0.4, so slightly weaker. Core came in 0.3. So CPI really wasn't that terrible. It was a little bit of a miss, but not too bad. Retail sales, on the other hand, is where we got really, really weak numbers. 0 against 0.4, and then X autos and gas, 0.1 against 0.2. So the retail sales number is very, very weak, and of course, very, very concerning as well. So you have inflation not so weak, retail sales weaker. We are short dollars.
Inflation not so hot, you mean?
Yes. So yeah. I mean, inflation is weaker, but not really that weak. We're short dollar Swiss at 90.23, pretty much right around these levels. It may be a bit more of a slow grind sometimes, and that's why I kind of left on the swing trade and let you guys know that, we were in that short dollar CAD swing trade because sometimes we only get the first movement. But we'll see, we're short dollar Swiss at 90.23. It's not moving much, but, I think we're in the right direction. There's a little bit of support at 90.05. Euro dollar, there's a little bit of resistance at 108.85. Let's take a look at dollar yen. Dollar yen is moving lower. This one could move lower as well, just simply from a flow perspective, but we're in short dollar Swiss. We're in long euro dollar. I don't think we need to be in dollar yen as well. Maybe, if we want fresh trades, we could wait for a little bit of a retrace in some of these pairs and wait a little bit, see if we get a little, we get the bounce off the low, and then we get a green candle followed by a red candle on the shorter term charts to see if we have an opportunity to join into any fresh trades on this move. So we'll hang tight on this and wait. Do you have any setups that you're looking at, Boris?
I'm just waiting patiently and sort of letting you do a lot of the FX trades. As I said, we took one trade in NASDAQ, 27 in at 37 out, made a couple $100 on that NASDAQ. I'll show it to you when I grab the screen. Right now, I'm just looking. The prices are all way above the moving average on the 1 minute chart. I'm letting them, come back, settle down. It looks like we sort of the knee-jerk reaction up. But as Kathy was saying, the news is good, but not great. So we have to really gauge and see how much more juice there's left in this lemon here for the market to start. So one of the more interesting things I'm watching is that gold, which was much stronger pre-market, had the knee-jerk up, but now is actually starting to give up its moving average, starting to come back down. That could be the precursor to a little bit more profit taking going on as we go forward.
Yeah, so we'll hang tight. Maybe there will be an opportunity to the short side as well. What we liked with this is we like to see if we get any, we wait, like maybe now at the stage we're gonna wait at least 15 minutes and see if we get any meaningful movement in one direction or another. But it does look like dollar CAD is moving lower again. So we'll just hang tight. Dollar CAD definitely seems to be sensitive to the downside, and it looks like it could be an interesting short. And if we look at our shorter term charts, we just see So we're just waiting. So basically, you know, we're still in the short dollar trade. I like the dollar CAD short trade. I like the euro dollar long trade, the dollar Swiss short trade. And sometimes we get really big movements. Sometimes we get very little movements. We got a really big movement off of the data and party off of our dollar CAD positional trade, 109 pips on that dollar CAD trade. So you may have caught a little bit of it if you shorted at 136.30 when we were in that. Otherwise, we're just going to hang tight and see if we get any real movement. Like I said, you know, the number, go ahead, Boris.
No, I was just going to say, I just went short gold and, you know, took the profit off. Remember I was saying to you.
Wait, where did you get short gold?
75, and I took it back at 74.3, just a small.
You gotta holler it to us.
Well, you know, you were talking, but there'll be plenty of guys. Trust me, when you trade with me, there'll be 10 more trades coming. I'm just doing these setups so I can show you on the charts exactly the structure of how we're going to be trading.
Well, why don't you show us on the charts now as we just kind of wait for the price action and FX to move.
Let me grab this.
And you know what? It does look like maybe this could be a bounce trade because the retail sales was a huge miss, but the inflation data wasn't too bad. And at the end of the day, the question is, you know, is this going to move the needle for the Federal Reserve? I think that the retail sales is weak enough to get them a little concerned. But, and I think, you know, obviously retail sales is a leading indicator of prices in general. I did not anticipate the big surprise to the downside in retail sales like it had here. But, you know, at the end of the day, the inflation part is not going to move the needle at all because it is right in line with expectations. So,
do you think this report now, this data set, assuming we don't get anything hotter going forward, is pretty much a shoe-in for a September cut? Or you think
we have a lot of numbers between now and September, so nothing is a shoe-in for a September cut because we have May data, we have June data, so there's a lot of information.
My assumption is the data doesn't get any worse. In other words, the inflation doesn't get any hotter. Let's say if we're sort of stationary at this point, it seems like the market is right now, the odds are pretty much. I think
that's a lot of assumptions that we can't make because there's a lot that could happen between now and the September data. And it's certainly not assumption that the Fed's going to make either. There's a lot of information between now and September.
I'm just wondering, like, as far as what the market is interpreting, because it seems to me the market is taking this as a relatively bullish event for the time being. We'll see if it can just hold the rest of the day. But for now, the market kind of thinking, okay, maybe this is the worst of the inflation wave is over. Consumer is clearly weakening. I mean, I think the one thing that's really clear from all the economic evidence and all of the anecdotal evidence in U of M is that the consumer is definitely weakening. It's not in a recessionary format. It's not people.
So I've gone long dollar yen at 155.28 to see if we get a little bit of a pop to the upside on this. It's a little bit late to the trade, but we'll see. So so yeah, we'll see if we get some profits off of this dollar yen trade.
Okay.
But overall, I mean, today, and we're talking about today alone, the inflation data certainly wasn't terrible. And if we go back to our trading plan initially, and how we said that basically what all of this means, and I'm going to take, you know, the little bit more than 10 pips off here, 155.40 in dollar yen.
And Anchor is asking us, guys, what about crude? Anchor, I wish we could tell you something. Crude is literally up a penny. There's zero impact on crude today. It's not a trade. It's just dead. It's as dead as can be. So there's really nothing going on in crude. The trades are in equities and in gold and in FX right now. So
what's the trade in equities and gold?
Well, the equity trade right now. I mean, I'm just waiting. I'm just waiting for you to kind of finish up trading before I grab the screen. So you let me know when.
Well, we're just waiting, so feel free to grab the screen.
Right,
we caught some pips on the dollar yen. I'm just gonna be out of the euro dollar at 108.52, and we're gonna hang tight and see if there's any new trading opportunities that are coming off of this. And there may be at the 8:45 mark, so we'll come back to that.
All right, let me just move myself off so I can look at this. So right now, as you can see, I have three screens, three charts open over here. We have gold on the bottom. we have the S&P in the middle, we have NASDAQ. And by the way, all of them are starting to really correct. So let me just run you through the initial trades that I did so you guys can kind of understand what the trade was. This is NASDAQ. I'm going to get a little bigger on the candle so you can see it. NASDAQ was obviously very hard to execute. It was a lot of delays here, trying to click the buttons, but I was able to get in off the first minute candle because it was clearly a positive response, and I thought there was some continuity there. So we got in at 27, got out at 37. That was a $200 trade, nice and clean. Then, as I saw, basically what you see here for price action is you're not making any fresher highs, right? We're still making higher lows over here. That was actually relatively bullish for a while, but then we kind of died. And this was the first lower low, right, in NASDAQ. Now, all of this was happening was still above the moving average. I like to, if I'm going to
sold dollar CAD at 136.20. I'll go back to that. U.S. yields are down quite a bit, and so bonds are telling us what they think.
So can you tell people what that means? U.S. yields down a bit. What are the bonds are telling us?
So bonds are telling us. So when we're not sure how the market is moving, or you're not sure how the market should be moving, what you should be looking at are bond yields, because usually the treasury market, the largest market, has the greatest and the best insight into what should be the interpretation of the data. And U.S. 10-year Treasury yields are down 1.5% right now. And so it tells us that the market still interprets this to be dollar bearish.
Dovish.
And it tells, what?
Dovish, the Fed dovish.
Dollar bearish. And it tells us that they still think that there's justification for an interest rate cut by the Federal Reserve. And so that's what they're thinking, that's what they're feeling. And so for now, we've got to respect that. We also see the same sentiment in stocks. Stock futures are up, Dow futures are up well over 150 points right now. And with stock futures up well over 150 points, that indicates the market still thinks low interest rates, lower interest rates, whatever it is the story. So I think right now that the dollar, that the Q from stocks and the Q from bond yields is negative dollar. So I think dollar yen 155.33, euro dollar CAD we sold at 136.20. We're still short dollar Swiss. I think that it's right now for the day trades, that tells us that that is maybe the right direction to go.
I just you see me taking a trade in gold very late on this trade, but it's all part of the setup that I kind of wanted to share with you. So going back to my description of why I was short gold. I only want to be short any instrument.
So I'm going to grab the other 10 pips here in dollar CAD, but I do think that if you're looking, that dollar CAD could end up going to test the figure, 136 even. I'm sorry about that, Boris. Go ahead.
Yeah, it's okay. Just tell me when you're done, because then I can explain.
We were also short, dollar yen at 33, so we're watching that one, and we're still holding this dollar Swiss trade, which is not doing anything at all.
Okay. Cool. All right, it's fine. So Kay's actually banked a lot of nice P&Ls, right? Can you recap?
Let's wait and see. We have a lot of live trades on, so I don't want to recap right now, but we're getting there.
Recap the winners. Be like
so we basically went long dollar yen at 155.28, closed at 155.40. We went short dollar CAD at 136.20, grabbed 10 pips on there. We're right now 10 pips in dollar yen, so I'm you could start to grab your 10 pips there in dollar yen. I think it might go lower. And we're still, we took a small hit on euro dollar. We're still short dollar Swiss right now.
So this is, what's interesting is trying to understand, this is basically a negative yields trade that you have on right now, because you see the yields going down. That's why she's short dollar, because she thinks they'll be $1.
100%. That is what I was trying to say, and I hope that is something that you guys really take away, which is that we weren't sure in the beginning, right? We weren't sure is the number dollar negative, dollar positive. If you look at first, a dollar dropped significantly and then it popped upwards. Okay, which way is it going to go? Is it going to continue to fly upwards and erase the entire initial drop in the dollar, or is it going to resume its slide? You have no idea. But so what do? So look at yields and look at stocks. Yields and stocks will give you the clues as to which way to think and which way to position. So, I wasn't sure. We watched the price action. The price action didn't give us any clear direction yet. So we moved over. If you want to pull up the yield chart, Boris, we moved over to yields. And you can see on Boris's screen, yields are down 1.8%. You have it in your watch list. Yeah. Yields are down 1.8%. And so that's and it held it. And the fact that it was down 1.8% and it held it tells us that the market wants to take this away as a dovish story, as a yield negative story, as a dollar negative story, as a risk on story, as a Fed, whatever expectations they have for September is still in play right now. And that's what is the main takeaway. And yes, Neil, women are always eager to speak and get our voices heard, but we always have good things to say, right?
You have no idea. We talk over each other all the time. Just sort of to kind of let you guys know. So this is my super scalper indicator, which obviously I don't really trade yields, but it's just to show you kind of interesting. It narrates a story because these little dumpster fires tell you it's telling you hyper short-term selling pressure, right? And now what's interesting is it's really a tale of two cities. So yields are hyper negative, they're bearish, dumpster fire emojis on them. When you go to gold, it's the exact opposite. It's rocket ship. It's going to the moon. So same kind of idea. Remember, lower yields is positive gold because gold is a non-yielding instrument. So if yields are going down, people are much more likely to plow themselves into gold. Gold has actually been going up irrespective of any fundamental factors. It goes up when a dollar goes up, it goes up when a dollar goes down. But when dollar goes down, gold really has a huge amount of rocket fuel behind it. So you see all these rockets, signaling to you that it's enough trade. That's why I took it over here, and we'll get into the specifics of how we scalp and how we use price action to really time it as perfectly as we can. But fundamentally, you're seeing these things develop on the charts, and they're kind of really communicating the same story that Kathy was telling you, both visually and technically. So it's kind of interesting. Anyways, right. Yes, go ahead.
So, right now, we're still, the only trade that I'm holding is still this short dollar Swiss trade, which is really going nowhere. But I do believe, as we continue to watch US yields, if you look at Boris's screen, it's gone from minus 1.8 to minus 1.89% on the 10-year yield. So, well, it's going back and forth. The bottom line is it's still down a lot.
Well below the number. This is where it was before CPI. It's really dropped a lot. It's dropped like what is that? 20 basis, 30 basis points, a lot. Yeah. Go ahead.
So I still think the dollar is going to drip lower. Now, will we see new lows? I don't know. I still like dollar yen short at 135, 155. It's 25. I think that maybe we'll get to test 155. I don't think we're going to break the news low. The news low in dollar yen is 154.75. I don't think it's going to have enough oomph to break the news low. But one of the strategies that we use to trade news is that we have news candles, right? The 5-minute news candle. If the 5-minute news candle before the London Open, very important, before the London Open is broken, so like 155.65 in the top side in dollar yen, or 154.70 in dollar yen, then it could really move the other way. With euro dollar, same story. With euro dollar, the candle high is 108.69 and the news low is 108.30. So if one of these are broken, that's going to pave the way for a new opportunity in one direction or the other. Now these are very far away. Well, no, they're not that far away. I mean, 108.56 and 108.30 is, only 25 pips away. And the top side.
You want me to pull up the euro dollar and kind of show them?
Yeah, that would be great. So okay. The point I want to make is that we're 20 minutes into post data. So now that we're 20 minutes into post data, we traded the initial moves. 20 minutes post data, we have to be much more selective about trading news. And the way we're speaking about selective, and for those of you that later on, I'm going to put in the video that I have on YouTube on 3 ways to trade news that kind of outlines this. Now that we're being selective, can you put the 5-minute candle chart up, please, Boris?
Sure. On the euro dollar or anything else?
Yes, euro dollar is fine. And just maybe zoom in a hair.
Yeah.
Okay, so what I want to point out is the high, this news candle, the huge 5-minute news candle. These are the candles to watch. The high of that candle is 108.670, basically 69, and the low of the candle is 108.30. So now that we're 20 minutes post data, and we still have a lot of time before the London close, watch these highs and lows. If the high is broken, it's going to be paving the way for a new breakout move to run to 109 in the euro dollar. If the low is broken, it's going to pave the way for a run to 108 in the euro dollar. And I think there's opportunities on both sides. Pull up dollar yen. I've been talking consistently about how I like selling dollar yen. And dollar yen has not broken its higher low, but I think that this is really it's going to move to 155 is what I said. And I think it's still going to happen. It's already 7 pips into the move that we talked about. So I still very much like this trade.
So this is 155. The range on dollar yen, the candle range, look at that range, by the way. Look at how big it is. It's 55 versus wow, they really killed it on the wait, where's my thing here? I'll just move it over here. 75. Wow, it's a big range. So look at this dip. I don't know if you were, this is Kay, I think you can just sort of confirm to me, this is why you cannot trade pre-news. Well, of course you can, but if you're willing to trade pre-news, just be prepared for, imagine you were long dollar yen on this news. You thought the number would be hot. You came in at essentially 55.50. Your execution, your first stop was 75. It was like 75 pips away. The market the dealers just pulled away completely. There was no chance for you to have gotten done at anything but 75 or 80. So it would have been a huge loss for you. And that's the reason, it's fine to take a punt on these things, but I think you have to mentally be prepared for, at minimum, 100 pip loss if you're on the wrong side. Sometimes, remember in the old days of NFP, sometimes you would have a 200 pip loss. But those are kind of mentally the kind of mental gaps you have to be really prepared for if you are on the wrong side of the market, and therefore you got to size it properly, and you have to be just sort of also mentally prepared for it, because these are the kind of volatilities that can happen pre-news, right, Kay?
Absolutely. I just want to share I had a video on YouTube that we talked about whether the US dollar is headed for a crash. By the way, we're going to take profits here at 155.12 in dollar yen short. Hold on, let me just do that.
Okay, so Kay is taking profits here. And I think it's the only thing that you have left over is the Swissy, right?
Yes, which is doing absolutely nothing. Swissy is just flat at 32. It's not up, it's down. It's obviously in a little bit of a loss. I'm probably going to get out of this one because we made good pips in all the other currencies, and so it's just whoops, sorry, at 90.32. Okay, so what was I getting at? So yes, right now we're just in, the moves have happened. We're in wait and see mode. I still think dollar yen's gonna head down to 155. It's and I think there's a very good chance that this could happen. So that's the one that's really moving more than any of the other ones. So if you want to punt down to 155, that could be an opportunity as well. We've been all over this dollar yen trade. If you want to pop on the dollar yen chart, Boris.
Sure. Sorry, I'm just looking at comments here to see. Look at dollar yen.
So what I want to look really close is how dollar yen's below the low of the open of the two news candles. Can you point that out, Boris? Yeah, right there.
You talking about right? You mean this one right here? It's below this one?
Yes. Okay. So that definitely is a little bit of a red flag to me. Now it remains to be seen whether it's going to hold, and the real level to watch is the downside. But I still think that it should move lower. And let's look at Boris's yields. I think you moved your yield screen up a little bit. Yields are down 2% right now. Where's your yields? Yeah, so it continues to move lower, and that is our guide to trade. That is our guide. If you don't know what's going on, you can't figure out what's going on. We talk about this every day. Even on a longer term, we look at daily charts. We say how important yields are to the direction of everything. And so even when we don't know what's going on, we take a cue from yield. So if there's only one thing you take away from today's live trading session, aside from making money, is that if you have no clue what's going on, look at yields.
Yeah. So just to let you know, technically, what this chart is kind of painting, each red candle that you're seeing is actually stretched away by at least 7 basis points, which is 0.7%. This is on a 5-minute chart over here that I'm showing you. Generally, we do it on the 1-minute chart, but that is a significant amount. Anytime you move away from the moving average by that much, it's like a rubber band. That's why it's trying to come back a little bit. The way this trades, or the way generally price action is going to develop, is 2 things. You're either going to have the price action try to come back to the moving average, right? So naturally short covering a little bit of mean reversion, which is why Kathy is watching the price action a little bit carefully, because she's mindful of the fact that there is just simply a natural short covering rally that could possibly happen to get us back to the moving average. Or if it's truly negative and there's just zero power to kind of short cover it up, there's just no buyers at all, what you're going to see is this moving average start to really slope downward, and it's essentially going to try to catch up to the price action over the next couple of candles. So this is actually, as the candle starts going down, seems to be the proper scenario, right? Which is like there was just, you saw there was very little. They couldn't get it up. They couldn't even rally it up. But this helps you interpret technically what's going on fundamentally and flow-wise in currencies. I mean, in any instrument, but specifically in yen, which is like the only currency, that I'm really enjoying watching, because like the only currency that's.
I wouldn't say that, Boris. I would say that, and maybe time will tell, that pairs like Eurodollar also respond to yields, but sometimes with a lag. So you may end up seeing, once the dust settles, maybe it's waiting for the New York equity market open, but once the dust settles, it's could respond with a lag and end up rallying. So we'll have to see. Yeah. But dollar yen is inching closer and closer to that 155 level that I had been talking about.
Now, by the way, remember Kay was talking about the fact, watch the breakout levels, the news levels. This is, maybe you could talk to them a little bit about the London close and these levels and how this may operate, because this is really interesting. We're basically half hour from the New York Equity Exchange open, and then at 11 o'clock New York, or is it 12 noon? 11 o'clock New York, I think, is the London open for London fix, right? So between that time, it's going to be interesting to see if the U.S. traders really want to run and gun it here through these levels. And as Kathy was saying, if they gun it through this news level, that opens up the gateway towards the 109 level, because that's where all the stops are over there, all the short stops are over there, and it's very lucrative and very tempting for dealers to want to come up there, sweep the stops, and bring the currency down. So watch it. It should be a really interesting afternoon.
Yeah, absolutely. Understanding how instruments move at specific times of day is going to seriously give you a huge edge in trading. And I put in our fundamentals course link, which talks about that. But in a nutshell, especially with these news releases, first of all, you get obviously the initial movement that happens after the news comes out. Then, you may have some continuation followed by a grind into the New York equity market open. And then, for those of you that are familiar with trading the equity market open, Boris trades this all the time. The New York Open is ripe with opportunity, and it's the golden hour for trading, which Boris will trade with you at the open. But my point I want to make is that usually you get like some push extension move at the New York Open. Then you get follow through. And then right before the London close, oftentimes what will happen is you will get a new high, new low set, and then it will stop. It will stop. You get a new high and new low set, and you may think, oh my gosh, Kathy told me that this new high happened. We broke out of the news candle in Eurodollar 108.70 at 11 a.m. New York time. Time to buy. Wrong, because that is the greatest time for fake out. And that is why I said earlier, as long as this happens before the London close, before 11 a.m. New York time, or even ideally 10:30 a.m. New York time, because oftentimes you'll get a new high, new low set at the time, and you'll get the reversal. And you'll get the reversal because London traders are going home and they're squaring off the positions. And so fake outs are much more likely than breakouts at the London, near the London close. So we only want to trade this if it happens in the early New York open hours, you know, between obviously between 8:30, the number release, and probably about, you know, 10 o'clock New York time. Maybe there's a little bit of wiggle room, but as you get to 11, if there's a breakout, you know, I would step aside. So knowing how instruments move and what the behaviors are at various times of day are very, very important.
Right. And as you can see, we're starting to see a little bit of profit taking in the NASDAQ and in gold. I'm starting to get red candle alerts. If we go back to, for example, the gold chart right over here, gold is starting to pull away, do a little bit of a corrective move in below the SMA. Where's the, let me find NASDAQ. And NASDAQ is also coming under a little bit of pressure here, starting to sell off. So, you know, so we had a big push, corrective move, secondary move, which would have been a nice trade here. We just, you know, we're busy trading FX, plenty of time to trade equities later. Over here for the profit, and now it's, you know, it's going to be interesting. Right? Basically, to me, the interesting story here is this the highs of the day? That's going to be the really interesting. So one of the most, and by no means am I arguing this. I have no idea. Honestly, I really have no idea. And I don't think anybody knows really how the market is feeling, whether it's uber bullish or whether this could be the peak. But if it is the high today, we'll know relatively soon. Like we'll know within the first half hour if they can't take out the highs. That could mean that this was, you know, news spike high, and then we could have distribution all the way down. And then more importantly, just like as Kathy was saying, if not only you know, do we start to distribute, but we take out the lows of the news candle in NASDAQ. In other words, go back to 18,400. That's a negative signal. That means the rest of that, you know, time we're going to be trying to trade from the short side for the most part, because that's the highest probability trade. That means the market is just saturated with buyers and looking for some profits. That's not what I'm forecasting. I don't have any idea. Honestly, I don't know how much more juice there is left on the buy side. There's always more juice on the buy side than you think these days. But right now, you know, we're just consolidating, but just looking at this right now, what you cannot say this is unequivocally bullish, because we have not really taken out the post-news highs, right? If we're trading above post-news highs, that would mean there's just so much bullish sentiment pre-market. It definitely would be worthwhile. Right now, it's an open question. That's what makes the charts so beautiful. You know, what Kathy and I love to do is to trade fundamentals in complement with technicals, right? We understand the fundamental story, and then we see how that fundamental story develops itself on the chart. And then we also have, obviously, these are indicators that I wrote myself that help us interpret the technical story in the most intuitive way possible, right? And doing that really helps you with your short-term analysis, helps you time your trades better. That's why we're able to hit all those trades pretty accurately. And all of that is part of our BK process. All of that is part of my pass the prop process. So if Kay would be so kind as to put the link up there, feel free to come join us for that, or for any other activities we do at BK. I'd love to have you there. These are all indicators that are available only to BK members. You won't even find them. They're not even listed on TradingView. They're proprietary indicators. And I'm only showing you, frankly, only about 20% of the functionality of the indicator, because I want to keep the charts clean and, you know, fully automated. Like one of the things that I can show you here is that we can, it'll give you a very clean little analytical table of the NASDAQ, the high, the low, the range today. The range today is 84 basis points, and you know, the bullishness on the 1 hour trend, which is actually pretty bullish on the 1 hour trend. So,
well, no,
sorry, go ahead.
Now, basically what I want to say is, you know, Boris trades the New York equity market open, which is going to happen very shortly. And, you know, Boris, I just want to recap my trades
Yes.
real quick.
You want to take the screen?
Yes, let me just change the presenter to me, and then so, basically we came out of the gate. We had short dollar Swiss, euro dollar. No, those trades didn't work out, got out quickly. Went flipped, still short dollars, but without different pairs, dollar yen, dollar CAD, went and realized that dollar yen was really the one that's moving quickly. And so we latched onto that. So we had 4 out of 6 winners on the day, the reactive news trades. And you can't expect big moves on reactive news trades, especially on a day like today where we really didn't have these huge movements. Last time we traded inflation with you last month, we had really big movements. And so there was a lot of opportunity. And so here we got in and out and in and out. But we did catch, 30 pips, 4 out of 6 winners on the day trades, and 109 pips on our dollar CAD swing trade. But most importantly, we zeroed in on the direction, and we got the direction right, which is that the market interpreted this to be dollar negative. Wasn't so sure, I'll admit, in the beginning, because CPI was in line, retail sales was weak, but then we zeroed in on US bond yields to tell us which way we should go. So we focused on the trade, and even now, as you're seeing my dollar yen chart, we're hitting that 155. We're getting very close to that 155 level I've been talking about all morning. So the trade was in dollar yen. Sometimes it takes a while to figure out where the trade was in. This trade is in dollar yen. I think the trade is also still going to be in dollar CAD. Dollar CAD loves to gravitate to the round numbers. I think it is also going to hit 136, but the real trade's in dollar yen, and sometimes it is evident very quickly. Sometimes it takes a few minutes to figure out what's the right pair, but the main takeaway that you should have from this is that yields, if you don't know what's going on, keep an eye on US yields. So as I said, if you want to Boris live trades every Tuesday and Wednesday. If you want to learn more about fundamentals, check out my fundamentals trading course. I am at this point of the day, I am done trading. One of the members, one of the people on YouTube, Tartuffe, said, isn't it just better to wait for the dust to settle and to trade later? And you're absolutely right. My best opportunity is going to come at the Asia session. When the dust settles, the market's fully interpreted this release. So I trade the New York Open. I trade the early New York Open, which is 6:30 a.m. New York time, and also the Asia Open at 8 p.m. New York time. So the best opportunity off of this will be, in my opinion, when the dust settles at the Asia Open. But what Boris really wants to talk to you about today is, trading futures, trading prop, and how to use this great offer that Apex has, that 90% off, which they almost never do. It's the best deal ever. 90% off if you want to try to turn to futures trading prop. We've all seen the mess that's happening in Forex CFD prop. Boris, if you want to shed some light on why how futures is kind of sheltered from all of this, and
Sure.
all of that information.
Sure. Well, first of all, our friends at Apex, correct me if I'm wrong, is it 170 million that they just paid out? They celebrated their 170th million payout. Is that correct?
Yeah, $170 million in payouts.
Which is insane when you think about this. I mean, I think that they probably do more in payouts than all the Forex firms do in actual fees. That's really, really impressive. And the reason why, Kathy's been very much on top of all the problems in the Forex prop, and there's some very, very good Forex prop firms. So don't get me wrong, it's not a tar brush to everybody, but the inherent problem with solid Forex prop firms, of course, is that you're dealing with a dealing desk structure. That means the firms themselves are setting prices and are therefore taking the risk. When you're trading futures, the futures are traded on exchange. They're traded on the Chicago Mercantile Exchange. So regardless of what futures firm you're trading with, the price is the exact same price. Not only is the price the exact same price, as you'll see when I make trades, if I'm the highest bid and the first timestamp, it doesn't matter that there's literally $10 million behind me, there's a much bigger order behind me, I get executed first. It's a first come, first serve basis. It's a very, very democratic system in terms of structure. And that's why, I think obviously the futures prop space has just been inured completely, that hasn't been affected at all by any of these issues because the execution is all very, very transparent and clear. You know exactly where the trades are booked, and more importantly, you know, it's just it just gives you enormous amount of clarity to know that there's just a single price. You're not going to get, you know, one broker has one price, another broker has a different price for the exact same thing. Furthermore, I bet many of you didn't know this, but literally every single CFD, so NASDAQ, US 30, gold, oil, all of the CFDs that you are seeing quoted, they're all quoted off the Chicago Mercantile Exchange price. The CFD brokers are making a synthetic price instantaneously, not just like I'm talking about microseconds, based upon the combined price of the Chicago Mercantile Exchange futures. What they like to do is they'll average out a couple of months worth of prices inside of it just to see what the book is. So literally you're trading the futures price, whether you're trading CFDs or futures. That is the price that gets set. That's why you never see a situation where futures go up and CFDs go down. They are completely correlated because one is dictating the price of the other. The price level themselves may be different, but the price direction is never different. So those are key things to remember. You know, when you're looking at futures as a product, you know, it's a great product. You can also see, you know, we can do bid ask. Another great thing about futures, even though I don't practice it because I'm just a, you know, market entry order, there's lots of guys in my room that will be very patient and will buy at the bid. That's a huge savings. It's a huge, you know, it's a huge savings to buy the bid, sell at the ask. You're already, you know, 2-3 points ahead in your trade just by being able to do that. That's a very, very lucrative and attractive thing about futures as well. So you just have, I think, an ease of execution and kind of a better transparency of execution in a lot of these spaces. The negative side, and there are some positive sides to CFDs, which I think it's very much fair to point out, is futures are fixed products. Like in CFDs, you can trade tiny, you can take 1/10 of 1/10 size because they're all customized product. In futures, you have just micros and minis. You don't have anything smaller or anything in between. So you kind of have to mix and match in terms of sizing. But if you understand how to trade size proper to your account, then you know you can do very well in futures. Like for example, this is an account that is a $250,000 account that I'm trading. I have another one that's a $50,000 account. And this account, I'm basically just trading one standard futures. So the tick size in NASDAQ, so in other words, I'm trading $100, $100 target, $200 risk in NASDAQ, and $50 target, $100 risk in S&P. Actually 37.65. So very, very small size. Could I go, you know, 5 contracts? Could I go 10 contracts? Absolutely. I just simply give myself very, very small sizes, so I have an enormous amount of flexibility, and I don't get very far behind in all my trading. We can talk a lot about strategy and sizing and everything else, and whether you want to do it hard and fast or low and slow. It all depends on your personality. It all depends on how you want to do it. But one of the things that you'll find out, the way I trade, it's very trust me, just like everybody else, I love to swing for the fences and hit it hard. And I've done it a few times live trading, and it's been a lot of fun. But frankly, when you get funded, right, when you become an adult and you have real money to trade, you have to be responsible. You can't trade, you can't trade for the fences with a prop account because you're going to blow it up in the first week of getting it, right? You're going to lose that opportunity. So what I try and do is trade low and slow on the evaluation so that you have these really, really good habits once you're put onto the live account. It's kind of like being in the cockpit of a plane. What are those called? Simulators, right? You fly the simulator exact same way you would fly the actual plane, because when you're entrusted with a real plane, you got to be careful with the.
So Boris, they're saying they're still seeing my screen. If you want to share your screen.
Oh yeah,
and also,
yeah.
You know, earlier, if you look at the comments, you know, someone here says pass the prop is awesome. It taught me how to pass them consistently. Highly recommend Boris's pass the prop. They did not pay me. Steven says, I've been trading with BK for close to the year. Two of the best. Thank you so much, guys. You are so kind. And I hope that you really learned a lot from this. You know, there's, you know, every single day the markets are different, but there's definitely things that are the same that you can take cues from. And, you know, our goal is to help you become a better trader. And there's, you know, a variety of different ways for you to do that.
No, absolutely, absolutely. Oh, oh no, I thought my YouTube feed froze. No, it just came back. Yeah, no, I mean, passive prop has just been literally, personally, the
What
most
is
satisfying.
pass the prop, Boris?
Passive prop is a 3-month boot camp course, which includes all of Kathy's Forex trades, all of my equity and gold trades, and once a week intense coaching session with me that basically helps us go through the strategies, through the psychology, through anything else that we can think of, the techniques, the refined techniques of how we want to trade the prop accounts. And as a result of this, as a result of doing this, we're literally been on pace where every single week I have at least 1 or 2 members new members pass the prop. We've had some members who have like literally passed like 10 of them, have like 10 accounts that are live, that are trading. And that's been, frankly, the single most satisfying thing personally from my perspective. And the thing about this, by the way, is that it's not, the great thing about pass the prop is that you don't have to do what I do. You can learn from my techniques and then apply your own techniques. We have some guys in the room that do nothing but trade gold, and trade gold in just kind of the way that I teach them, but not necessarily the exact way that I teach them. We have other guys who are trading everything under the sun. We have some guys who are trading really, really big trades that take 1 or 2 big trades during the day and just try to milk 100 points out of the thing. We have other guys who are doing nothing but scalping like me. My job is to give you the tools to find something that really resonates with you, that is also rational, intelligent, and proper as far as trading goes. And it's been great. It's really been like the most satisfying thing we've done, both from an education point of view and definitely from the P&L point of view, because I've never seen so many traders have such great P&Ls as I've had out of this program. So that's why we decided we originally were going to do this like for just a little bit, but now it's been such a popular program that I'm happy to have people come and enroll. And it's great because in addition to, of course, getting exposure to me, you're going to get exposure to everything that Kathy does. You kind of get all of Kathy's great fundamental, technical, and trading skills and analysis as a bundle to this. And then if you're, the other thing I was going to say is if you're really, really interested in how she's taking all these fundamentals, weaving them together into a trading methodology that's been so consistent that I think we have like already 4 or 5 years, at least 3 years of just consistent monthly pure profit records. Kathy has a track record of all of her trades that she posts live in our Discord room. Then the fundamental course is just a great complement. So you can have everything that you want over there under your thing. So something is are there lots of girls trading very well? Oh, as somebody says in their last, yes. So the other thing that is very, very unique about my room is that we have a lot of lady traders, and I always bust all the guys' chops over this because the women traders are killing it. The women traders are really, really great. So if you're a female trader and you want to have a great community and companionship, you can come trade with us. And guys, of course, it by no means does it mean that we have the least politically correct room in the world. I drop F-bombs every 5 seconds. Like when I say we have women traders, they're all completely inured to all of my, as is Kathy, to all of my complete thuggishness and piggishness. So don't worry, it's not a politically correct room. But the female traders are awesome, and I love them. Seriously, why no options? Well, for a whole bunch of reasons. There is, you can be a jack of all trades, master of none, or you could be a master, of one thing. So, as Bruce Lee once said, I never fear a man who practices 1,000 moves. I fear a man who practices one move 1,000 times. So there's only so much you can do, right? That's one reason. The other reason is because I find options just really, they're not a tradable instrument. They're a positional instrument, So I'll leave it at that. Zero DTE, I really haven't had a lot of experience with zero DTE, so I don't have much to say about it. I prefer to trade Delta 1, as we say. Delta 1 means if it moves a tick, it moves a tick. Futures are a Delta 1 product if you're an options trader. So I like to be a Delta 1 trader. That's why there's no options. See if there's anything else here going on here. Is there always a monthly fee just like an Apex. Oh, could you buy this? So, by the way, the cool thing about Pass the Prop is it's a 3-month huge discount. So it's not a month. You don't get charged monthly. It's just a one-time fee, 3 months, and then if you want to, renew, you can renew later with me. If you want to sign up for a monthly service, you can certainly sign up for a monthly service. Absolutely, yes. If you want to be a lifetime member, we have a lifetime membership. You just pay one price, and you have us for lifetime. And you also can also buy the membership on an annual basis. So we have lots of different plans. If you have any questions, just email us at contact@bktraders.com, and we'll be happy to guide you as to what we think is best. Yeah. Anything? Did I miss anything, Kay?
No, I mean, just that basically, take advantage of this Apex offer because it's the best one that we've seen.
That is really great. I mean, the other thing is the good thing about Apex, by the way, just kind of let you know, you can buy these, right? You don't have to use them right away, right? That's really, really valuable. So you can just harvest them. A lot of people like to just buy them at a discount, and then when you're ready to trade, you can just release them one at a time. They're really, really good. I mean, I don't know anywhere where you could get essentially 10 accounts for the price of one. That's what it comes down to. I spent, I think, as much on my bagel and lox breakfast this morning as you would for one $50,000 evaluation account. So, and trust me, the bagel wasn't that good. So, it's just a great, great deal. I'd certainly be taking advantage of it. So it looks like we're about 10 minutes in front, and I see, we're starting to, oh no, sorry, I need to go to gold. I was just gonna say gold looks like it's starting to dive. So remember I said gold is kind of the canary in the coal mine a little bit. Gold is unwinding a lot of this risk trade, and this is where it's interesting because this is the news candle on gold, right? And we can watch that coming in. It feels like a little bit like the air is coming out, not sufficiently so that I cannot quantitatively say, oh, we're going to unwind this trade, but we're definitely starting to see a little bit of the air come out of the risk trade pre-market. So this should be a very interesting first half hour of the market as far as we're trading. I mean, gold is clearly. The slope of the 8-period SMA is starting to slow down. We're starting to print a bunch of red candles. This is not a constructive chart if you're a bull right now. It's a constructive chart if you're a bear. So we'll be watching all of this as the market starts. So is there anything else you need to summarize? Do you want to grab the screen, or can we look?
I'm done trading. We made good pips. We have 4 out of 6 winners in day trades. We made 109 pips in swing trade. This is your platform to trade futures right now in the New York Open.
All right. So just to review what we've done so far, just a few scalp trades, pre-event. We shorted gold 75, bought it here 74. Then we went the other way. This is one of my favorite trades, and this is such a great setup. Now remember, just kind of prefacing all of this, what I'm going to day trade with you here is just scalp only setups. Why scalp only setups? Partly because it's part of my personality. I like to take very, very short trades. Partly because if you're doing scalps, your risk is very minimal. I'm risking 1.5 points maximum per trade. $150 maximum per $250,000 account that I have. I have a $6,500 drawdown. So if I'm losing $150 on a trade, it's clearly just a nick. It's a nick that you don't necessarily feel. And what that allows me to do is sometimes, if things don't go well, you have 2 or 3 bad trades, you're not dead. I could have 10 bad trades, and God forbid, I probably jinx myself, but certainly. I even yesterday we had a very tough beginning and then a pretty good ending, but the worst of it, I had 4 negative trades in a row. None of that even nicked me badly, and that's why I like to do it. The other reason is, and this just has to do with all prop firms. Prop firms generally have what's called a equity drawdown. So this makes it very, very difficult. Let me give you an example. The most extreme example: you have a $50,000 account. The account you get long. Let's say the S&P 500, and you're holding because you're like a long-term, long big trader. The account has a $2,500 drawdown and a $3,000 target. Now the S&P goes to 52,500, right? and you're like very stubborn. You're like, I'm not taking my profits. I think it goes further. It goes to 53,000. I'm going to get funded off that account, right? Well, you're wrong. The market then comes back and retraces all the way down to 50,000. You're stopped out. Now, what's happened? You haven't lost a penny. You're at break even, but because it was at 52.50 on the high, it retraces from the high. And so the way that's something that's very difficult for a lot of traders to control, the people who like to have long targets. And we never run into that problem because I'm always selling at my equity high. I never have to worry about, I'm selling it, it goes 10 points up. I sell 10 points up, I'm done. I locked in the highest equity position. So I'm never, my drawdown is always $6,500 behind me or $6,000 behind me. I'm never in danger of getting stopped out because I went up and then I was too greedy to take the profit and then came back to break even. That never happens to me, and that's why I like to scalp. But somewhere in between is where a lot of people who like to trade with me do it. That you don't have to be as extreme as I am, but you also need to be mindful of the fact that you cannot just simply hold trades in perpetuity. That's not how the prop models work, and that's the thing that people have to get very, very used to before they start doing it. I'm watching gold right now, actually, and it's starting to pop back up. Towards a more positive slope. So if we come back down below and come back up, that's probably going to be a buy for me. We'll take a look and see what's going on here on all these charts. Where are we at? It's what time do we have here? It is 2.5 minutes to the open, so still got a little bit of time. I'm going to put my glasses on, and I'm going to. So let's set up the proper instruments. This is going to be the S&P. S&P is very, very quiet, right? Not really doing much. So this is probably like a good visual size. I have my orders all preset. This is just gonna let you know my setup here for those of you who are interested. I'm using Trade-Evade. Trade-Evade is a cloud-based, web-based futures platform that is offered through Apex. Trade-Evade also integrates directly with TradingView. So the engine underneath this is Trade-Evade, but I'm actually trading through TradingView. And the reason why I like to trade through TradingView is, of course, we have our proprietary indicators on TradingView, and you can, buy, sell off TradingView with stops and profits. And all of these are pre-configured for me. So it's just a click of a button, whether I want to buy or sell on these things. And then it takes me into the trade. So that's the setup here. It also allows you to see in real time all of my trades get executed on the charts, so you can learn the setups, you can visually understand the setups. It just makes it much easier. So that's the basic structure behind how we trade. So looking at the market now, I think the most bullish, frankly, is NASDAQ. I'm kind of tempted to take this trade. All right, we'll take a punt on this. I don't like to take trades at the 9:30 hour, but I'm going to take a punt on this, and I'll explain to you why I took this trade. Because this trade was above the 8-period moving average, and this low was higher than this low. And I'm probably going to just, what I'm going to do? I'm just going to take quick profit here. I usually try to go for 100, but it's pre-market. I hate trading the 9:30 candle. I hate trading 9:30 candle. It's a prescription for recipe. Generally, what I'm going to do, usually my bad habit is to always jump into the market at 9:30. Today, I will do no trades until 9:33. I will just do nothing. We'll just watch the market because I'm going to force myself not to jump into lots of volatility. And you see, by the way, how NASDAQ is kind of popping up and down, jumping around. Although I would have definitely gotten done on the open. It doesn't matter. It's just not worth the volatility to let it play out. What's interesting, by the way, is it's 9:30 in the morning, and this is the same pattern that we've seen yesterday, which is kind of surprising and almost maddening at the same time, is that generally the market open should have volatility, right? It's 9:30. And when you look at this thing, it's not just that there's no volatility. You might as this is a patient on life support. I mean, we're just comatose. Look at this vol. It's a 3-point vol after the news has moved. It's kind of crappy. NASDAQ, by the way, did the flush, right? So I probably would have gotten done on my +5, but then I would have just, I could have just easily been stopped out. And this is why you don't trade the 930 candle. Somebody's yelling at me gold. Somebody's yelling at me gold. Gold is actually looking negative, right? Gold is kind of looking negative. I'm watching gold here. I don't, I want, if I'm going to trade negative, I'd like, I mean, I could have taken this candle short because this was a lower high than this candle, but I'd like to, I think I want to see one more candle on gold. This candle has a higher low, so it invalidates any kind of a short I want to have. I want to be trading lower lows on the short side, higher lows on the long side. I'm always looking at the highs and the lows of a particular instrument, right? And what's interesting to me is that gold is maybe the canary in the coal mine for the rest of the risk trade, that maybe we're kind of going down on the rest of the stuff. Right now, we're holding above the 8-period SMA, not really much going on over here. And really also same kind of a thing, guys. Look at this. We're just, this is what happened to me yesterday, and I made the mistake of trading this. And now, I mean, if I don't get the trades, I'm just not going to trade. I'm like, screw this. This is a recipe for disaster. We need to see this this volatility, expand a little bit. If I can't get any, expansion, I really don't have a trade. And I'll show you, some of the stuff. So now this is good. Now we're starting to get a little bit of expansion, getting a little bit of volatility to the upside. I'm actually, this might be, depending on how this, this has got a hold here. It's a pretty big trade. I might actually go long this trade, and I'll tell you why I would go long this trade. So this is a low. This is a much higher low, right? It is a big extension, but let's organize ourselves here. But this is the kind of a breakout candle that's maybe worth trading. Let's see. It's got to stay in the range. Got to stay in the range. All right. I went long. Let's give it a shot. I'm, not loving this trade because it kind of died out on me, but it's still a higher low. And no, it's retracing. What I say? No trades before 9:33. You know what? All right, you know what? I'm getting out of this trade. Just for 20, 30 points because I, too much volatility. It actually did trade my way. I was correct in trade, but again, too much volatility for my liking. I just took a little bit of profit. We'll take it. We'll just keep banking profits as we go. But the principal idea, and this is, the reason why I don't like to trade this sort of the first 5 minutes is because you get these huge wicks. The principal idea, let me get rid of this range now. You guys know this will be distracting for you. What the key thing that I want to be watching in this thing is this was the low and this was a much higher low, right? That's very, very bullish. That's bullish, the structure. Now, I'm going to show you where that kind of a construct is incredibly lucrative and where it's only, like right now, this is just a mildly lucrative construct in this particular structure. I'm looking at the S&P right now. I want to see what's going on in the S&P. Oh, am I on a 5 minute? I'm on a 5 minute chart in the S&P. I was like, well, what the hell's going on? Let's go to the 1 minute chart. Okay. Yeah, this is much better. Okay. I should have been sorry, Kathy put me on a 5 minute chart, so I totally forgot about it. This is actually so, let's watch the S&P here. I'm going to watch the S&P, this particular candle. The S&P, I love the S&P. We like to trade this with a 3 target 6 stop. So 3 tick target 6 stop. Taking the 5300. I'm watching the. All right, let's get long here. Let's see if this works. Now we're looking for. I think I'm in. 5350 is my target. Let's go to the DOM. Let's see where we're at. Yeah, I'm right there, and I just got done. So here's what I want to show you. When trend happens, here's what happens in trend. I'm going to get big on, and actually let me get rid of the labels so that there's no, so there's just to have a nice clean chart so you guys can see it. And I can do this all day long, any day, 5, 6, 7 times in an hour. And when you're in sync, this becomes a money tree. And what you're looking for, I'm not going to do this right now because I want to show you, explain the trade for you, but we can do more of them later on. What I'm looking for is once we get into trend, the key thing about trend is that you get higher lows continuously. Just ignore everything else, look at the lows. As long as the lows don't break the prior lows, it's an uptrend, right? And that uptrend, once you make the profit here, the next candle holds, you get in, next candle holds, you get in, you literally can go 5, 6, sometimes 7 scalps in a row in a continuously strong trend before you get clipped out, before you finally. So in this particular case, I wonder if you came in here at 301.50. The high was, oh yeah, you would have made money because we're looking just for a small scalp. You came in at 150. You're looking for 75. That would be 302.25, and you would have made money. Even though this particular this low is not quite hasn't broken yet, so it still continues to be an uptrend. So you would have made money 1, 2, 3 times in a row here, right? Really, really cool. Now I'm gonna give it a little bit of breathing room here. I want to see how these things trade right now. In similar type of situation, as you can see in NASDAQ. Now NASDAQ is actually broken. NASDAQ is broken. Now NASDAQ took out all the highs, and now we're kind of coming down below. And NASDAQ is actually showing us the opposite setup. Now we're below the 8-period moving average, right? Now we're starting to really, really come in. The S&P is probably going to follow. Now we're getting a red candle, which is a pull away from the moving average. Really, really pretty big pull away. And now, let's get a little bit wider here. I'm going to take the executions off, and we can put them back on later because they're kind of distracting on the charts. I want you guys to see. The profit is 3 points, 3 ticks on the S&P. So 3 ticks, 6 ticks. It's a 1 to 2 risk reward ratio. And the profit on NASDAQ is 5 points target, 10 points stop. The profit on gold is 7 ticks, or $70 against $1.50, $150. So it's basically 1 to 2 in all the ratios, because you have to have, when you're scalping, you have to trade with a negative, a risk reward ratio, but you're looking to hit, 8 out of 10 or so. So far, you've seen me. I think I'm up like already 5 or 6 trades, all positive, and I'm just trying to, the idea is, can I gun it to maybe 8, 9 trades, and then I'm done. Then I'm kind of done for the structure. So the other thing that I love to do, and this is for all, especially for equities, which I consider to be long bias trades. You can see big up move, right? Now this is, I'm watching this. We're gonna trade this. This is a setup that I like to do. Let's see if it works for me today. This low is above this low. It's underneath the moving average, but it's moving towards the moving average, right? And the slope of the moving average is positive. It's a positive bias trade. And let's see if this positive bias trade is. I'm just you have to be very patient. Let the trade complete in the 20-second cycle. Let me also see like what the S&P is looking at. The S&P is sort of very similar. Very similar. I like trading S&P a lot. So I may just simply trade the S&P first. Let's see if this gets me done. So 8, 9 seconds. I'm underneath the moving average, but I have a higher low. So I'm going to take this trade. So I'm in this trade and I'm looking, and hopefully I can get done 5,200, and I'm done. See, that's it. That's all I need to do. I just need to time it like this. I have the candle. This is frankly the bread and butter trade that I love to do, right? Like this is my bread and butter trade. I know it's super fast, and you guys are like, oh, Jesus Christ, Boris, I didn't have a chance to click my mouse. That's fine. This isn't about you clicking your mouse. It's about you learning the setup. Because if I can burn the setup in your mind, you will have it for the rest of your life. And you can freaking do this literally 20 times a day and just bank it. So what I love to do, let me just kind of deconstruct this slowly for you. What I love to do, and we can show you the chart, I can show you the executions so you guys can follow this really cleanly. Actually, let me just get this really big on the charts so you guys can totally see this. Okay, so what I love to do is, obviously S&P is up, right? Big up move. We have a nice smooth upward tilting 8-period SMA. We dipped below the SMA, and what we are looking for is a higher low. That means the sellers couldn't even break the low over here. That's a bullish impulse. More importantly, if it's underneath the moving average, there's every confidence in the world they want to sweep it through the moving average. They want to take it up higher, right? They want to keep the trend going. So pre-trend is actually one of the best strategies. Now, you're going to look at this and say, Boris, you could have had 3 points on this. You had, you risked like 1.5 points. You could have had 3 points. You're absolutely right. This is not the only way to trade this. It's the only way to enter it. You can exit it a million different ways. But what I want to teach you is the entries, because the entries make the money, right? The entries is the key to getting you in the right position. So here in this particular case, this was, 37 on a one contract is 37 against the 75. And this is like, I think already, if we count this, it's like 1, 2, this 2 trades in the S&P. Let's just collect how many trades I did. 1, 2, 4 trades in, so 4 trades, and then we did the gold trades. How many gold trades did we do? 1, 2, 6. So 6 trades to the good, I think. Oh no, there was another S&P trade. There was a big S&P trade. Yeah, 7 trades, right? 7 trades in NASDAQ, right? 7. So 7 trades. 7 winners so far, which just keeps me very much in sync of where I want to be, and that's what I just try and do. I just try and do that all the time, right? Now, you notice that I didn't really, get gung ho and try to buy this one, because again, I was watching this whole area of resistance over here. The market is trading heavy at this 5,300. We clearly, spent most of our upside in the news, and we're kind of just basically holding over here, right? Again, it's not out of realm possibility that we could get exhausted and we get like a really nice sell-off, maybe into the 5280s. So there's no reason for me to kind of get chasey over here, but I am more than happy to get underneath the moving average and see if I can just, pop it through the moving average. Like this particular setup in a higher high construct is my money trade. And that's what if there's nothing you guys can come away from, it's this. That's the idea. It's that money trade. Now gold, as I said, the other thing is I said gold is like the canary in the coal mine. It's constantly making lower lows. Now, we were trading the equity, so we didn't have a chance to look at gold, but gold certainly offered us some really interesting short opportunities, right? So if you're looking to the short side, you have a negative 8-period slope, right? You have the price come down below. This one over here, this candle over here is a lower high. So I would be short here, 23.71.9, targeting a 71.2, and it actually goes 2 points in my direction, right? Same kind of a thing over here. We kind of just barely break above, but the slope, I would have said to you, no, I wouldn't have traded this because the slope was mildly positive, right? So the slope being mildly positive, I probably wouldn't have taken this, but this would have been a pretty decent trade over here to the downside. Now the slope is totally negative, and if it comes back up above, loses the moving average, it'll be another good trade for us to take in the in gold. In the meantime, everything else is turning kind of negative on the equity side, and when we have all 3 of them in charge, we can see, like, so for example, E-mini S&P, which was super bullish for us just 5 minutes ago, now is really starting to look kind of negative, right? The slope is negative. We're making fresh lows over here on the lows, and it's not a horrible idea to get short. Now, here's the thing. I'm watching this, I'm watching this price action. As I said to you, generally, I am much more biased to the upside than I am to the short side. Not because I love the long side, but because equities are a bullish instrument. And right now, as I'm looking at this thing, even though we had a little bit of a dip, this is actually a bullish construct for me. Again, it's the same kind of idea. Lower low, higher low, waiting for 44 seconds. If we can, if this can kind of hold it, I would trade it. Now, obviously, if this becomes a negative candle, if it kind of closes below over here, I wouldn't want to be a buyer here. I'd like to see some strength on the move. But generally, equities are a primarily long instrument. So is gold right now. However, this is a really interesting candle over here because we can watch this, and you see it's kind of losing its momentum, right? Now starting to turn red. This now actually changes the tone. And this is, by the way, why we wait. We absolutely wait till the close of the candle, because until the candle closes, the story isn't told. So now, as I'm watching this, if this price starts to kind of come back down, right, starts to making lower lows, that now creates a possible trend to the downside, and you could initiate short trades here and begin to see maybe we have a short process coming in. What's my overall bias on NASDAQ? For the next 1 minute, because that's all I'm good for. That's my bias. I don't have so here's a NASDAQ. So this is interesting. NASDAQ is NASDAQ honestly, when you're looking like from a more eagle's eye point of view, it's not like there's any clear trend. We're just if you look at this, we're basically within that comatose box. What I've done so much more intelligently today than I did yesterday is I've kept you out of dumb trades in the comatose box, right? I'm just waiting for the edges. I'm waiting for the edges of the box, and only if the box is broken, or if I can buy myself at the edge of the box, do I want to participate? And most of the time, I'm basically not participating has been the absolute correct story right now over the last 10-15 minutes, and that's fine. This is why this kind of analytics really keeps you out of trouble. So this is S&P 500, right? Let's look at this. We have the S&P 500, and we talked about the idea of the construct here. So I said, want to see a lower low over here, right? However, as I said, I don't like to short these things until we get a consecutive lower lows. This was a higher low. This was a lower low. This is a higher low. It's telling you that the market is just not really confident in one direction. You want to see a confident market is where you have all highs or all lows. This is a very sort of a not confused but uncertain market. We are definitely starting to pull away, right? So if I'm looking at this candle over here, and by the way, here's another trick that you can do. If you're not super confident on the construct of a trade, just make it a small one. Like sometimes I'll just go micro. I'll go micro because I want to vibe out my trade. And if I want to vibe out my trade on the sell side, I'll vibe it out here for for tiny little moves, just to see how well my thesis is holding up. So this is all lower lowers. Now it's starting to really make some lower lows moves. Let's see if now I could get short this, but I'm still I'm gonna do it on the micro contract just because I don't want to be in retrace risk. Okay, so I'm short here, and it gets done right away, right? I think it got hit right away, didn't I? Yeah, it was super fast. So we could have done it with a large contract, but again, when you want to practice this move, when you want to practice this entry, you want to just do it on a small contract. Just get your time. It's like hitting a forehand, or more importantly, hitting a forehand. Really, you need the timing. You need to be completely confident. Okay, I got the setup. I'm going in. I got the setup. I'm going in. And when you do that, you can see that with 5-10 times an hour, you're in rhythm. You spend an hour doing this, all of a sudden, you know, 10 trades at $50 each average. Some of them are 100, some of them are 50. Let's say $50 average. That's $500. You know, you're done for the day. You want to get a larger size, you could even try a larger size. But you know, it only takes 3,000 to pass the 50,000 test. You do this for a week, and you could have a reasonable chance of passing the test with very, very little drawdown against you, because you know your stops are so tight. So this puts me at +8 for the day, 8 consecutive winning trades, which is where I really wanted to be today. So I'm gonna kind of go because we have meetings for the rest of the day, and we had a really, really good long session with you guys. I'm gonna give you a couple of minutes for Q&A. Let me know what you guys think. First of all, I want to thank you guys for all coming. It's been really, really great to have you. Secondly, those of you who were with me yesterday, I hope you see how I can suck one day and be great the next. And the difference is this, the chart, and my ability to read it, right? You can change, you can get better if you just step back, figure it out, and get in sync with the market. It's like anything else. It's like hitting forehands. It's like you know, hitting drives in golf. You can definitely get better, and the more you practice, the better you'll get, as long as you kind of just, you know, rhythm. What did I do yesterday that was good? I did not lose my shit, right? I did not freak the fuck out. I did not get large on my size. I did not revenge trade. I just took it like a big boy. And then, you know, I got better at the end of the day. And then by the end of the day, I pretty much made most of it back. And today, I'm at fresh equity highs. I'm at fresh equity highs today, right? That's what I kind of want to show you, that it's not about winning. It's about knowing how to step back and correct your losing. So much better than yesterday. Guys, Stephen, right? Am I right, Stephen? There's a much better structure, much better trade focus and concentration. So hopefully you guys really, really liked it. So yeah, I'm 8-0, which is where I like to be for the day. Kathy also had a great day. Any questions here? Anything else that I can help you guys with? Please take advantage of the Apex deal. If you want to come trade with me, come join me at Pass the Prop, or just join us at BK. If you want to learn the funda, take Kathy's fundamental course. It's a great course. It's an awesome course. You'll really, really enjoy it. Thank you so much, guys. I really, really appreciate it. Everybody have a wonderful, wonderful day, and I will see everybody next week. We're going to do this all over again, Tuesday and Wednesday. We're going to trade live. All right, guys? Everybody enjoy. Thanks a lot.